Hi there, Brian D'Amico here from VectorVest, and tonight I want to walk you through 5 steps you must know to generate monthly income with options. The most common thing we hear from people who are investing in the market is, I just want to generate consistent income. Well, the 5 steps you'll learn today lay the foundation you need so you can safely supplement your income each month so you have extra money to just relax and do the things you want to do. Let's look at what we're going to discuss today. First, I'll lay out the problems and struggles you probably are facing or have faced when trying to generate income with options. Then we'll look at what's possible when you do it right. In other words, the opportunity in front of you. After that, I'll detail the 5 steps you need to generate consistent income with options. Once we do that, I'll map out what your option income game plan should be. I'll give you everything I've got today, and at the end, if you feel this is something you want more help with, I'll tell you what we feel would be the best action items you should take. Let's get right to it. If you've ever traded options or thought about trading options, what's holding you back from generating income right now? In other words, what could be the problem? Well, first off, you feel lost. There are so many terms with options. You have no idea what they all mean. You don't know how to find an option trade or how to set it up correctly. You end up wasting countless hours trying to figure out what to do. You end up messing up and making costly mistakes. You let one big loss wipe out any small gains you've achieved. Why? Because you freeze when trades go against you. You simply don't know what to do and when to exit. You're left standing there like a deer in the headlights, and you let losing trades crash your portfolio. Plus, when the market's up and down, you find yourself late to the party. By the time you get in, it's too late and the market starts to go against you. Overall, you fear you'll run out of money if you can't get things fixed. The income reserve is dried up and you fear you won't have a way to replenish it. But it doesn't have to be that way. Instead of that happening, you want to know exactly where to look to find your option trades and how to set them up correctly. You want to be the one in control. No more messing up or freezing when trades go against you. And you want a way to make money no matter what the market is doing, whether it's going up, down, or sideways. All so that you can have a consistent source of income, a tap that you can turn on or off whenever you need it. So let me ask you a question, and I want you to spend just a few seconds and write down your answer. What would having an additional paycheck do for you? Actually think about that and write down your answer. Okay, now let's dive into the 5 steps to generate income using options. Step number 1 is that you need to be a seller and not a buyer. Now let me be clear. You can be a buyer of options and be successful at that technique. However, if we're going to use options as an income system for consistent income each month, we teach to be an option seller. Let's take a look at why we should sell options in the first place. I mean, why don't you just stick to buying stocks or buying calls or buying puts? Let me ask you this. How many different ways can a stock's price move? Well, it could move up, it could move down, and it could move sideways. When you buy something, such as you buy a stock or buy a call, what direction does the stock have to move for you to make money? Well, yes, it has to move up. In other words, it has to go in your favor. That means there are 2 other scenarios that could happen where you don't make money. So the people who buy benefit in one of the 3 scenarios. People who sell benefit in 2 of the 3 scenarios. Let's put probability on our side by selling options. In other words, let's get paid to play the game. Here's an example of a typical trade that we see get made over and over. You'll find a stock that looks like this and you'd be bullish on it. You think it'll go up, so you buy a call option. Why do you buy a call option? Well, mainly because it's what you've always been taught to do when you started learning about options. But what ends up happening a lot of times? Well, either the stock doesn't go up or it doesn't go up enough and the call you just bought ends up expiring worthless. Has that ever happened to you? Yeah. Well, let's talk about the problem that's causing you to lose. All right, well, problem number one is you might be picking the wrong stocks. A lot of people just trade the stocks they know or they hear about on TV, but those aren't necessarily the best option trades. So problem number one is you might be picking the wrong stocks. Problem number two is you're choosing the wrong strike. You might be picking strikes that are way up here, and you buy that option because it's cheaper. But the likelihood or the probability that the stock will ever get to your strike price or exceed it is very, very low. And then problem number three is you choose the wrong time for your expiration. You select an expiration that is so close. Again, you're probably doing that because you see the option and that option is very cheap. But let's talk about the real problem. The real problem isn't that you're picking the wrong stock or the wrong strike or even the wrong expiration. The real problem is that you're on the wrong side. So many people start off with options and are taught how to buy an option. But even when you pick a good stock and you pick a strike price that might be closer, or you select an expiration that gives you more time, the probabilities are still not going to be on your side. When you keep buying and losing and buying and losing and buying and losing, those losses, even though they might be small losses, they really add up. It's like a boxer who repeatedly gets hit by a jab. I mean, it's not a massive roundhouse that knocks him out in one punch, but it's a little jab after little jab after little jab. Eventually, it does a lot of damage. Your portfolio eventually suffers a death by 1,000 paper cuts, and you bleed your portfolio dry. There are three main parts of options to talk about right now. There's the expiration, there's the strike price, and then there's the premium. In other words, the price of the option. For every option trade, there is a buyer and there's a seller. As a buyer, the expiration date works against you. You have to be right by a certain date. And every day, a thing called time decay eats away at your option. The strike price is something that you need to overcome. The stock that you pick has to go in your direction for you to be right and make money. And then the premium is something that you pay to somebody else. That's money out of your pocket, and you're right back to the buy and hope mentality. Whereas as the seller, the expiration date, well, that works for you. Every day that goes by is more money in your pocket. The strike price is something that's easy to avoid, and the premium is something that you receive, so you get paid to place the trade. So as you can see, there's so much more lined up in the benefit column for the seller. Okay, step number 2 is to sell options that expire soon. It's like going to the grocery store and you see a piece of steak on the discount rack. Well, they're on the discount rack for a reason, because they will be worthless very soon. This concept will be good for you as an option seller. You'll sell options that expire soon. This serves two purposes. Number 1, it gives the buyer of the option less time to be right. And number 2, you make money faster each day as the option decays in value. Let me show you what I mean. Here you see what happens to the price of an option in relation to the number of days until expiration. Now this is assuming everything else remains the same, the stock's price, everything else. All this is looking at is what happens to the value of an option in relation to time going by. What you'll notice is that over 180 days, it took 135 days to lose half of the option value. And you'll also notice in the last 45 days, the price really drops off. In those last 45 days, the option loses the other 50% of its value. So if you've been buying options with less than 45 days left until the expiration date, time decay would have been eating away at your possible profits each day. Instead, you're going to be the seller of those options. As the seller, it's going to be like little mini deposits each day. Each day that goes by, you're keeping more and more of the premium that you collected at the very start. Step number 3 is to choose low probability strikes. A mistake most buyers make is that they choose strikes that are so unrealistic. It's like betting that the ball will land on green on the roulette wheel. While the payout might be bigger, the probability of it happening is really low. The casino ends up winning in the long run. Option buyers make the same mistake. They choose strikes that are so far away and the stock has little chance of hitting it. Instead of buying those, you are going to be the seller. In other words, instead of being the gambler, you'll be the casino. Let's look at what you need to do. Since there are buyers out there willing to buy call options way up here, you're going to be the one that sells it to them. You are selling an option that has a low probability of getting hit. We don't use guesswork, we look at statistical probability, and the options that we sell have less than a 40% chance of getting hit. Many times it's even less than that. The same goes for puts. You can also sell puts down here. Since there are buyers out there willing to buy put options way down here, you are going to be the one that sells it to them. Again, you're selling an option that has a low probability of getting hit. Now, you might be thinking, this is dangerous because just selling an option involves a lot of risk. That's called selling naked options, and that is not what we do. Again, let me repeat that. We do not sell naked options in this income system. Instead, you need a built-in protection plan. That's step number 4. When you sell options, you're going to build in a way to protect yourself just in case things go wrong. Let me show you how this works. The system you use ultimately determines how you reduce risk, and all of this is done before we even open the trade. First off, we choose stocks that are low risk. We have very specific criteria for picking good stocks in the first place. Then, instead of selling naked, we're going to sell with protection. Let me show you how to do that. Here's a graph of a typical stock that we'd be bullish on. It's a beautiful graph, and it's understandable to be bullish on a stock that looks like this. Traditionally, people would just buy the stock here. They may even buy a call and use that as the strike price. Instead of doing it that way, you're going to do this. You're going to sell a put down here. In this example, the probability of the stock being below this strike price at expiration was 30%. Again, you want it to be 40% or lower, so 30% is right in line with that. When you sell the put, you receive a premium. Basically, you are getting paid. However, that would be a naked put, and it leaves you no downside protection in case the stock drops. So what we do and what you should do is use a built-in protection plan to protect yourself. You will buy a put down here as insurance. That protection plan does cost something though. To buy that protection, you need to use some, but not all, of the money you received from selling the put. That will leave you with a net credit. That means you get paid to place this trade. Think about what this has done. The stock could go up and you could make money. The stock could go sideways and you can still make money. The stock could even go down a little bit and you can make money. Of course, if it goes down too much or too quickly, you'll have to manage that trade, but just keep in mind having that protection in place also helps to reduce emotional trading because you now have a defined risk. Let's put some real numbers to this. In this example, selling this put resulted in a credit of $1.78 per share, which means for every contract that you sell, you would receive $178 because each option contract controls 100 shares of stock. At the exact same time that you sold that put, you would buy the put as insurance. In this example, it would cost 82 cents. So what's the net result? This results in a net credit of 96 cents per share, which means you would receive $96 per contract. And typically you trade more than one contract in this type of a scenario. If you did 10 contracts, that would result in a net credit of $960, which we'll talk more about in just a moment. But first, let's talk about the main point of step number 4, which was to reduce your risk and have a built-in protection plan. So let's talk about the maximum risk. Since you sold the 135 put, but your insurance doesn't kick in until the stock hits 130, that means you have $5 of risk per share. However, you did receive 96 cents per share as a credit. Thus, your maximum risk is reduced to $4.04 per share. But I want you to keep this in mind. We teach you to never, ever, ever lose the maximum on these trades. So these trades have a limited risk, which helps control your emotions. Well, now let's talk about something else that will help control your emotions. And that is step number 5, which is don't be greedy. You don't want to be chasing bigger and bigger gains because if you're not careful, all the gains you once had could evaporate. I think of that game show, Deal or No Deal. You go on that show with nothing other than what you have already. Then all of a sudden you're being offered hundreds of thousands of dollars. Some people don't take it because greed kicks in and they're tempted by the bigger prize. A lot of them either walk away with virtually nothing or something much, much lower than the previous offer. One of the main lessons we teach our option clients is less is more. Remember that old saying, half a loaf is better than none? History has shown that taking profits of between 25 and 50% of the initial credit received on trades like the one we talked about today has shown to provide increased percentage of winning trades, more profits, and it also gives you a chance to reallocate your assets. Out of all the techniques that we teach our option clients, this one by far had the biggest impact. Too many investors out there try to squeeze out every penny of profit only to have the trade turn around and they find they're left holding options for maximum loss. Taking profits between 25 and 50% of the initial credit resolves the greed factor. If we look back at our example, the initial credit on the trade was $96. If we did a 10 contract trade, the net credit would be $960. You should target half of that. In other words, your income target is $480 or 50% of the credit. Once you hit that, you exit and you move on to the next trade. All right, at this point, I want you to take about 60 seconds and pause the video and write down what's been the most valuable for you so far and why. Once you do, we'll talk about what your option income game plan should be. All right. Here at VectorVest, Ron Wheeler and our entire option education team have been working with investors and retirees to generate income using options. And there are 3 main areas we've found that you need to focus on and should be part of your game plan. So I'd like you to draw it out with me because this is your game plan. The keys to the game plan are straightforward. Since most option traders don't know how to find or select trades and it leaves you wasting hours of your time only to find trades that don't work out, which destroys your confidence, you need a simple way to screen stocks to find the highly probable trades that can return profits even if the market doesn't go in your direction. A lot of people don't know how to set up option trades, and it leads you to making mistakes and suffering loss after loss. Instead, you need to have a simple process to set up your trades so you know what strikes to choose and which is the best expiration. Lastly, most option traders don't know when to exit a trade, and it costs you tons of money because you don't take profits at the right time and you let one big loss wipe out most, if not all, of your gains. Instead, you need a trade management plan so you know in advance exactly when you should take profits and exactly when you should either adjust or exit a trade so you can maximize your profits and minimize your losses. There's a traditional way to find, set up, and manage, and there's a better way. If you're struggling and not generating additional income, the traditional way to find trades is to either trade stocks you know, watch TV, or scour the internet. All of these leave you with what I consider time wasted. The traditional way of setting up your trades is buying options that have very little chance of making any money, and they typically expire worthless. These all leave you with a low probability of winning. The traditional way of managing a trade is to freeze and do nothing. I call this the hold and pray method. To move to the better way, this is what we need to do. If we focus on finding trades, you need to shift to where you can easily scan for option candidates that also match what's going on in the market. By doing this, the amount of time that you spend is drastically cut down, and the time you do spend is time well spent. The better way to set up your trades is selling options that have strike prices far away and an expiration that is within 21 to 45 days away. By doing this, you will move to a high probability of success. Instead of the traditional hold and pray method of managing your trades, you need to have everything planned ahead. You need a plan that tells you exactly when to take profits and exactly when to adjust a trade that goes against you. So in order to generate consistent income with options, you need to focus on those things. That's your game plan. At the beginning, I promised I'd give you what we feel are your best action items, because we want you to get results fast. So the fastest way we've found to do this is what we call the Options Paycheck course, 7 Weeks to Income. It's designed to take you step by step through the system that you need to generate safe, consistent income. The outcome that you get from this course is a complete A to Z system to generate an average of 3% of income from option trades each month, so you can trade with confidence and begin to live the lifestyle that you want without fear that you're going to run out of money. That's why we put this course together for you. It's for serious people who want a system to find, set up, and manage their trades. And the easiest way to explain it is just to map it out for you. In Module 1, we'll cover all the building blocks that you need to know in order to build a successful options trade. A lot of people try to build a successful income portfolio, but they base the portfolio on a weak foundation of knowledge. It's like trying to build a skyscraper with a foundation that's 6 inches deep in sand. If you do that, everything comes crashing down. The outcome you get here is you will know exactly how calls and puts work, so you can confidently use them in your trades. You'll know which terms to pay attention to and which to ignore, so you don't waste time or get frustrated. And we'll lay out the 5-phase option income system, which will be the basis for everything we do throughout the entire course. Then in Module 2, it's all about getting paid whether the market is rising or falling. The market doesn't just go up. So you need to know what to do to generate income if the market goes up or down. The outcome here is you'll know how to combine calls and puts to create income trades that have a 70% or better success rate. You'll know which is the right trade to use when the market goes up and which to use when the market goes down. And you'll have the core principles of setting up these trades so you limit your risk and eliminate emotional trading. In Module 3, it's all about getting paid when the market moves sideways. This is important because if you don't know what to do, sideways markets can be very frustrating and costly. Just when you think it's safe to jump in, the market turns around on you. The outcome here is you'll know the most powerful neutral market income trade available and how to use it to possibly double your income without increasing your risk. Module 4, that's all about finding your trades quickly. This is important because you don't want to be wasting hours of your life digging around looking for trades. The outcome here is you'll know how to quickly find the best stocks for your trades, both bullish and bearish, how to match your trades to the market so you stack probability in your favor, and how to use indexes to generate income. Sometimes these are the best trades. Module 5 is all about maximizing the way you set up your option trades. This is important because you want to put all the probabilities you can in your favor. The outcome is you will know how to get paid top dollar for your trades and how you could easily search for the best option trades. Then in Module 6, That's where you learn to prepare yourself for what could happen after you place the trade. This is important because you don't want to be that deer in the headlights. You need to know exactly what you will do before the situation arises. The outcome is you'll have a game plan in place prior to placing the trades, so you know when you will exit, whether the trade goes for you or against you. Then in Module 7, it's time to get ready to place your trades. If you don't know this, you could go out and place option trades and lose out on a lot of money just because you didn't know how to enter the order correctly. The outcome you get from this module is you will know how to place orders to enter and exit trades so you keep as much premium as possible. By the time we're done, you will have a straight line system to generate safe, consistent income month after month after month. So here's the thing. This course is valued at $1,990, but we have a special for you today. Ron Wheeler and I and our entire team would like to roll up our sleeves and work with you for the next 7 weeks, and together we'll turn your portfolio into an income machine. Even if you've never had success with options, we're gonna do this. Here's what we'd love to do. If you want to join us and have us take you by the hand and help you install an option income system in your portfolio, then instead of the $1,990, let's work together for only $995 US. Here's where to go. Just go to www.optionspaycheck.com. This price is an early bird price only and will not last long. Additionally, registration closes soon. Once registration closes, we will not reopen registration for several months. So if you feel it in your gut that this is right for you, you've got to act fast. Before I tell you about all the bonuses, let me first say this. It is 100% guaranteed. You can go through the entire course, learn everything that we've got, and if you're not satisfied, you can get all of your money back. But I want you to listen very carefully, because this is a really tight refund policy. You need to do the work. Come to the classes or watch the recordings, do the assignments, take the quizzes, and if you're not satisfied that you have learned how to generate income, you will then be able to receive your money back after the course is over. But if you don't do the work, you won't be eligible for a refund. The reason we have such a tight refund policy is because we only want to attract those who are incredibly excited to jump in and do the work and get the results. We want to attract those serious investors. And in order to do that, when we make a really tight refund policy like this, we only attract those people who are serious about getting results. We also found that other members appreciate it because they know that only serious people are in the webinars with them and on the Facebook group with them. Now let me tell you about all the bonuses you get for signing up now. The first bonus is this. You get 7 live mastery support sessions. These are designed to help you actually implement the things you learn in the course. We'll take a look at the things you're doing and the questions you have and guide you. We'll be there to guide you through the entire process. If you can't make those sessions, no problem. You'll be able to submit your questions ahead of time, either on the private Facebook group or via a private email address that we'll give you, and then we'll send you a recording of the session. Speaking of the private Facebook group, once you join as an added bonus, you'll be invited to join the private Facebook community purely dedicated to investors just like you going through the Option Paycheck course. You'll have access to other motivated retirees and option traders just like you. Think about it. How would being around a support group like this increase the speed at which you learn and implement? You can ask questions and get answers for more clarity. Our entire team will be in there to help you. Plus, we'll be able to hold each other accountable for getting things done. The next bonus is huge. You're going to be pre-registered in our members-only group coaching program, which is typically just for our Ultimate Retirement Solution group coaching clients. So we'll invite you to that as well. You'll join Ron and Jim each week where they'll give weekly trade recommendations. They'll also give additional coaching for option trading techniques that are actually beyond the income trades that we talk about in the Paycheck course. There's going to be a complete Q&A period at the end of each week where we make sure all questions get answered. Now, I wish I could read to you all the positive feedback and great results people just like you have shared with us regarding the Option Paycheck course. We've put several of them on optionpaycheck.com, but here are a couple, and I want you to see if you can relate to them. We got this note from Richard, who took the course. He said, I wanted some way to make money in both up markets and down markets. This class has given me the ability. In just the second week of class, I started trading options using the system Ron teaches, and I more than covered the cost for the class. Having the plan presented to us as a basis to go from has given me complete confidence to move forward. Before the class, I would invest in options and either win big or lose big. Now that I know I'm not helpless when things move against me, makes me look forward to investing. When things go wrong, I can fix it. It is very freeing. Having such a clear plan of attack is all one can ask for. We also got this note from Frank, and Frank said, prior to this class, I didn't have an income generating strategy. I tried option services, but that was a great way to lose money. I'd especially get burned by holding too long, and I fell into the trap of buying cheap options, hoping to strike it big. After taking the course, I already have a profit of $7,300. Before the course, it was a crapshoot. Now I believe in the options trade I'm doing. If you want to learn how to trade options and make money on a consistent basis, then there's no better course than the Options Paycheck. When you go to optionspaycheck.com, you can read about the experience of other investors just like you. I want to ask you a question though. How much is it costing you not to do this? What would it cost you if you did nothing? How much money will you lose? How much potential profit will you be missing out on? How much time and energy will you spend trying to do this on your own? Then ask yourself this: how would your life be different if you do it and it works? There's a saying that the best time to plant an oak tree is 20 years ago, so you could be sitting under it now enjoying its shade. Do you know when the second best time is? Today. It's not too late to begin to prepare yourself for retirement and learn to generate income. So again, go to www.optionspaycheck.com and get yourself registered now before the price increases and definitely before registration closes. On behalf of everyone here at VectorVest, we look forward to seeing you in class.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.